China is on the verge of collapse. That is a quote, and I'm going to show you all of the details you need to know. This isn't just one company like Evergrande. This isn't even just the real estate market of $62 trillion inside of China. This goes well beyond. What have we started to see? Defaults. They haven't been able to pay their bills, and as a result, there is chaos. You can look at the currency itself starting to be devalued significantly, and the expectation is that we are going to see a mega historic level bailout. All of that and more. Let's begin. The very first thing that we need to discuss today is the edge of failure. What I want to show you, number one, in today's video is that China did not do stimulus in 2020. Every other country seemed to be doing it. China didn't do so. You have the economy shutting down for 3 years. And of course, right now, consumption is low and unemployment is high. And it's getting worse as we see businesses being unable to keep up with everything. They have higher labor costs, higher input costs, but not enough demand. That's the circumstance right here. So let's look at the next part. Well, you could see it for yourself that China has officially fallen into deflation with consumer prices dropping 0.3% year over year in July. It's a particularly unwelcome ingredient into the mix. Deflation is feared because declining prices persuade people to defer purchases. And of course, you'll see that, right? People think, why buy it now? I could just wait a while. It's the exact opposite of inflation, where you say, I'm going to buy it today because I know tomorrow it's going to be more expensive. So China has a whole host of issues today. And I just want to give you the entire bit so that you can make informed decisions. At the end, I'm going to show you the winners and losers in all of this. Does that sound interesting? Let me show you. Here it is. I'm going to give you this quote, okay? On the 11th, the Economic Observer published a newsletter titled Finance Bureau Chiefs in the Past Half Year, reporting on the work of 3 local finance bureau chiefs this year, making 10 conclusions. The final conclusion is, it is difficult to reduce expenditure and increase income. And here's the big one, check it out. And the local finance and national economy are on the verge of collapse, and thunder will explode at any time. Can you believe it? This is not coming from me. This is like as official as it gets. And you are getting this from the high-level sources, but it doesn't stop there. I just wanted to highlight that very first thing. Now you look at this. China's central bank governor calls for economic prudence as his retirement nears. So this wasn't that long ago, okay? July 2023. You got this guy saying, we need some prudence. We need to step off the gas. We don't want to get too excessive. And then he retires. Or was it, hey, it's time for you to retire. Now we're going to step on the gas. That's what's going on here today. This battle in between, hey, we didn't want to do stimulus. We don't want to do this because it creates inflation. And then we've got a mess to deal with where the whole world is saying, no. We want to create as much inflation as possible. We want to devalue our currency significantly. And we're going pedal to the metal. Now we are going to see what happens in the next little while. But this is the big concern for China. High levels of debt. And this is what's known. My goodness, how much is out there? Because a lot of that, as I will show you today in a couple minutes, you can shift the debt to the local establishments, and that kind of hides it. What am I talking about? I'll explain it in a sec, okay? High levels of debt. It is, unbelievable. This debt to GDP ratio is over 300. Over 300 or will be anyway. And that's the expectation by Morgan Stanley. And that's, very likely. Other countries are, getting up there, but certainly not as high. Japan is, of course, higher, but there are very few countries that are doing the same thing. They want that growth and they've been willing to take on debt. The only problem is they're encountering some issues as a result. PBOC, that's the People's Bank of China, the central bank of China, right? Their advisor says that China urgently needs to boost consumption. Cai Fang calls for putting money directly in people's pockets. You heard that before? Oh, yeah. Officials have avoided what some of them call welfarism. They want to actually stimulate something they haven't really done. They've been doing a little bit of this and that. And as I record this video, there was, unexpected, an emergency cut. They did rate cuts in China, which they've done before. But this is now an emergency one, unexpectedly trying to cut those interest rates, trying to stimulate, trying to have more lending, more borrowing taking place today because there is a concern. So you have the actual, imagine like as if Jerome Powell came out and said, we need to do something that just UBI, we need to just send money out to everybody. Imagine what would happen. Well, that's kind of the equivalent here. That's unbelievable. But here you go. The most urgent goal right now is to stimulate household consumption, and it is necessary to use all reasonable, legally compliant, and economic channels to put money in residents' pockets. So you know what's going to happen. They're going to cut interest rates, or at least what they want to do. Cut interest rates, print some money, buy the stocks, and actually give out tax incentives and probably cash directly to people. That's what's going on right here. Are they then going to use their ECNY, their version of the central bank digital currency, in order to push it out? Here, everybody, here's some free money. Here you go. Here you go. Here's $1,000 equivalent. Here's $2,000, whatever the case is. Just sign up right here. Get your ECNY. What do you think? Do you think that what's coming here is going to somehow tie in to expanding their beta project of the digital currency into everybody? Well, it's possible. We will see. I'm interested to know what you think. This is like the official documentation, because I always show you directly from the source. I don't want to just take it from Bloomberg or Reuters. You could see it. Same thing. Cai Fang promoting the return of consumption should be the most urgent policy goal. This is a translated article, I believe, that I had pulled up. So how do you get people out of these recessions? You lock them down for 3 years. That's right. We need to stimulate the growth. We need to stimulate the consumption, and we are willing to take a risk on the inflation. That's going on. We need to learn a lesson from this, and that is, as soon as there is some level of deflation, immediately the central bankers, the governments, start hammering us with inflation, and we've got to expect the same thing in the United States, in Canada, Australia, New Zealand, the UK, and so on. Do you see what I'm saying here? Do you understand? This is coming. Let me go. We're not even halfway done yet, because I'm going to talk about the defaults that have happened or are about to happen. Let me show you what's going on. A 36-year-old wealth management firm in China with more than 100,000 high net worth clients delayed payment of its maturing wealth products as both company and its parent faced liquidity crunch due to the soured investments in the property sector. So they are connected, of course, to the real estate. This one company, I'm probably going to pronounce it wrong. It is Zhongrong International Trust. They have, basically failed to give their money back to its clients over the past few days after its second largest shareholder reportedly ran out of cash earlier this month. The chain of events, the domino effect, one can't pay, the other doesn't get their money, suddenly the clients don't have that cash, and you've got an issue. That's what's going on right here. The defaults have begun, and it's not just Evergrande, it's not just the real estate industry, but that starts to snowball. And what other companies? Are there any US companies that are affected by this? You better believe it. I'm going to show you. I have the list. I gave that as part of this, and of course the sources will be in the description as always. If you appreciate this information, hit that thumbs up button. I'm going to bring you the details you need to know. Let me go further into it. Right here, they just talk about the fact that they haven't paid back. That's a default. That's officially a default. Okay. Now, who knows if later on they're going to be able to pay that back or whatever, or they're going to get some form of bailout. But at this time, not happening. One of China's biggest shadow banks skipped payments on several investment products, sparking rare protests in Beijing as the fallout from a deepening property slump spreads to the financial sector. Same company, but this is coming from Bloomberg in this case here. I gave you both sources, by the way. I gave some of the sources from Asia, some of the sources from like Bloomberg, Reuters, and so on, so that we have a mix all around the world, information coming through, is one more accurate than the other? Well, why not just show it all? That's what I try to do here at this channel. That's what makes this different. I don't just get it from one source, or even worse, don't even show the sources and you simply take my word for it. No, I'm giving you the data. Look, this is important because it is affecting a lot of the different banks, investment companies, and it will teach us a lesson about what's going to happen even in, other countries as well. Okay, this is what we got to do. We got to learn from the issues that are taking place now as well as in the past. Pressure is building across China's financial markets, given a slew of disappointing economic data, renewed concerns about the property sector, and unfolding crisis in the shadow banking system. Investors are calling for more aggressive easing by Beijing, as the incremental policies so far have failed to revive confidence. That's right. That's right. The stimulus that you've been doing so far, not going to cut it. We need a big boost. They are going to devalue the currency. If it all happens, we will see. They've been calling for this for a while, and now it's really starting to take effect. Okay, already the currency has depreciated against the US dollar, but there's more to that. More to that. By the way, a lot of the suppliers inside of China are probably, in this case, if they're still getting a lot of work, they're actually not happy. They're not too sad about this because they're making US dollar in most cases. So that is kind of boosting them up in that circumstance. Okay, so you've got the shadow banks. They're defaulting right here and now, as well as the hidden problems emerging. Hidden problems. What are we talking about? Well, let me give you an idea. China to shift $139 billion of hidden local debt to the provinces. Program marks a step to address the threats to financial stability. Allowance has been set for each region. I mean, what are you talking about here? China will allow provincial level governments to raise about $139 billion equivalent via bond sales. Is anybody going to buy those? Maybe the government will. To repay the debt of the local government financing vehicles. By the way, and other off-balance sheet issuers, okay? This is what they're doing. You've got these refinancing bonds. What does that sound like to you? I can't pay you today, but here's an IOU. Here you go. Here's my IOU. I'll pay you back tomorrow. Well, I'm not so sure about that. I'm not so sure. We've heard about this historically, where countries had been unable to pay their citizens pensions or whatever the case is, and they say, here's a little bond, we'll pay you in 10 years. That's the kind of thing that they're doing right here and now. Are investors going to pick that up? I'm honestly not too sure. Country Garden is in danger of a default rivaling Evergrande. Debt crisis would hurt buyer confidence as the housing market builders have increasingly reported to use its grace period. So you can't pay, you got 30 days, pay up. We barely made it. Okay, there we go. That's what's happening. Country Garden has more projects than Evergrande. So Evergrande, I think, is bigger in terms of the amount of total debt, $300 billion. Country Garden is actually more going on. So we'll see how it goes on. Same situation here, just trying to address the financial stability, and they're not doing so much of a good job. Here, you asked for it. Who's affected? BlackRock, Alliance are among the holders of Country Garden bonds. Fidelity, UBS are on there as well. I can give you the whole chart. As you see, BlackRock, HSBC, Alliance, Fidelity, UBS, JP Morgan, on and on and on. Okay, so if you want to pause that or you want to look at the sources, they are there for you. This is all coming down right here and now. And I'm not saying it's going to be a failure. I'm not saying that this collapse is actually going to wipe China off the map or something. Absolutely not. What I'm telling you specifically is that they are going to go and they are going to print an excessive amount of cash. They're going to stimulate and they are going to reignite the inflationary fire. This is, of course, dangerous in its own way. You've got to be careful. You've got to watch out. This is extremely important because this is the lesson that we need to learn. China asks some funds to avoid net equity sales as markets sink. So China is saying, oh yeah, funds, don't sell your stocks. and I'm sure they're not going to. In fact, take a look. You could see it's right at the support line. This is the basically the tech index of China. And it's right at that level. It's been here, basically bouncing around since 2022. And they're not going to let it go down below that. Hold it right there, all right? Unless you want to be in trouble. China asks some banks to reduce or delay dollar buying. This was back on August 1st. Okay, they're trying to watch, we don't want our currency to be devalued that much, but guess what happened? Plummeting down. $7.33, yuan 33, and basically that used to be around the 7 mark. So this has been going down and down and down and down and down over the last little while. And I think it's really important that we see what's going on. There's not just one point. Let me just talk about Country Garden. No, I want to give you the whole spectrum so you can understand it. I need to obviously go deeper into each one of these, but now you get the whole spectrum. What do you do though? Are you going to sit back? Okay, just click on the next video. Well, maybe if you don't want to be informed, but I'm about to show you some stuff, okay? Watch this. Beware of your exposure. Check this out. Assess your portfolio right now. What kind of exposure do you have to China? Watch it very closely. If I'm not mistaken, Michael Burry sold off all his positions in the Chinese firms. Maybe he was seeing that, what's going to happen. But we'll see. Who knows what he has right now? I really don't know. I didn't look at the whole 13F. You could see the announcement of massive stimulus will boost stocks inside of China, which have been looking very weak, as I showed you a moment ago. So as soon as they announce that stimulus, as soon as the market is confident enough that they are going to be doing everything, markets can go up, up, and up. So who knows? And then the holding real assets are in times of excess. So when we know that they're going to do fiscal and monetary, that's government and central bank policies pushing that out there, that's a time of excess, and more debt will ensue as a result of this. You have to own real assets during these times. It is extremely important. So that's my message to you. You don't just take this information and run. You don't just go away like most people do. You stay to the end, because I'm going to give you the details that are the most important right at the end, only for those who stick around. Now, you get this serious stuff. I get it. I wanted to highlight the comment of the day, which is directly linked to this. This was before, and it got worse actually since the comment. RMB sitting at 7.29, very close to breaking support. China has no viable means to defend the currency, so it will break. It's just a matter of when. A break in the RMB will result in debt defaults and will be felt outside of China. Thank you very much. Comment of the day from, I can't pronounce it, but Goukux. I want to thank you for that. Comments are coming in and I'm trying to highlight them. I thank you so much. Every day I'm trying to do a comment of the day if I can. But if you want to communicate with me directly, the best place to do that is Discord. I got so much free stuff on Discord, and I'm trying to figure out how I can do giveaways. That's the challenge. I said I'm going to do giveaways. I promise I will. I just need to figure out how to actually do the giveaways, and that will be coming. So you're going to get that only if you're on Discord. So go down below. There's a link. Discord is totally free. And that's like a chat app where we can chat, communicate, and get free information. Okay, so hit that. I'll see you there.